The North American real estate market, which has attracted a lot of overseas real estate investment, has been in a recession for several years, as the vacancy rate has soared due to the widespread work from home since the pandemic. If prices continue to fall further in the global commercial real estate market, especially in North America, the losses of domestic financial companies are bound to increase accordingly. The overseas real estate investment of Korea's 5 largest financial group reached 20 trillion won, and more than 1 trillion won was recorded as a loss in 2023 alone. As the U.S. commercial real estate market, where investments from domestic financial companies are concentrated, continues to slump, investment failure is becoming more visible. More than half, 55.9%, approximately 11.4 trillion won of the 5 major financial groups' overseas real estate investments were concentrated in North America. The vacancy rate of U.S. commercial real estate soared to nearby 20% in the third quarter of last year, and asset values are plummeting. Even the senior loans of domestic commercial banks invested in offices in Manhattan, New York, the heart of the United States, are at risk of large-scale losses. Among these, real estate-related cases in North America, USA, and Canada alone amounted to approximately 11.4 trillion won, accounting for more than half, 55.9%. The largest exposure by industry was banks affiliated with the 5 major financial groups, 7.5333 trillion Korean won, followed by securities companies, 3.5839 trillion Korean won, life insurance companies, 2.7674 trillion Korean won, and non-life insurance companies, 1.687 trillion Korean won. With the overseas real estate investment of the 5 major financial groups exceeding 20 trillion won, related losses may snowball as the overseas real estate market shows no signs of recovery. As of January 16th, overseas real estate investments by Korea's 5 largest financial groups totaled 782 cases, worth 20.368 trillion won. It is an investment made by the financial group itself, separated from overseas real estate funds sold to customers. Hana Financial Groups had the largest investment principal at 6.245 trillion won, This was followed by KB Financial Group, 5.6533 trillion Korean won, Shinhan Financial Groups, 3.999 trillion Korean won, Nongyo Financial Groups, 2.3496 trillion Korean won, and Woori Financial Group, 2.1391 trillion Korean won. Excluding loan receivables, the total principal invested in 512 investments, including beneficiary certificates and funds, was calculated to be 10.4446 trillion Korean won. The current assessed value of the assets in question totals 9.3444 trillion won, which is 1.1002 trillion won less than the principal amount. The overall evaluation rate of return was minus 10.53%. Of the 10.4446 trillion won in direct investment, including beneficiary securities and funds, excluding loan receivables, 1.1002 trillion won was recorded as a loss in the books. The overall evaluation rate of return was minus 10.53%. Hana Financial Groups received the lowest report card and minus 12.22%, and KB Financial Group minus 11.07%, and Nongyo Financial Group minus 10.73%, also suffered double-digit valuation losses. Looking at the investment failures of domestic financial companies, there are cases ranging from investments that lost most of the principal to cases where real estate collateral was not obtained due to fraud. KB Securities invested a total of 120 billion won in 5 Australian rental homes in 2019, but the current valuation is only 83.8 billion won. Not only did it suffer a loss of over 35 billion won, but it could not even acquire real estate collateral due to fraud by the local investment companies. So it did not receive a single penny of dividends during the investment period of more than 4 years. Shinhan Life Insurance also invested 47.3 billion won in four office buildings in the US, UK, and Germany in 2018, but suffered a loss of about 32.6 billion won, even considering accumulated dividends 3.9 billion won.